from the likes, even from an Amazon's playing a little bit in the space, a little bit bigger in the space now. And then there's some other companies, Revolutions and Dancewear Solutions.
Great. Thanks, guys.
Yeah.
Thank you. Once again, ladies and gentlemen, if you wish to ask a question at this time, please press star then one on your touchtone telephone. Our next question comes from Jason Sutherland with Aegon. Your line is open.
Yeah, thanks for taking my call. I just want to follow up on the dance a little more. Where do we think this stabilizes? Is this the level we're expected to kind of go from here? You know, the last couple of quarters you've been looking at?
Yeah, we expect it to stabilize here. Q3 is looking more favorable, without getting into specifics. But and additionally, we're making some. We've made and we'll be making some more restructuring changes from a cost structure and from a leadership standpoint. So made some changes. We'll make some more changes to help drive additional growth. We feel like we're getting the cost structure right. We've got some product cost savings initiatives that are out there that will continue to provide benefits that we've talked about on previous calls. And through this recent restructuring, it's helped right-size the operating expenses and SG&A expenses, along with interjecting some new leadership in some key positions. So with all that, in addition to stabilizing, we feel like we're positioned for better profits in the coming months and quarters.
Okay, thanks. And then one other follow-up is on the revolver. I know you guys drew on that when you're building your inventory for the Mexican operations and stuff. Do you anticipate using the revolver going forward for working cap, or is this more of a one-time use, and then going forward, once you get it paid off, the revolver should just kind of stay at zero?
I think there'll be some seasonal needs. If you looked historically, we've even put 17 anomaly to the side. There'll be some seasonal needs, but for the majority of the year, after we get this paid off, I wouldn't expect it to be into the revolver very long or very deep.
Okay. What's seasonal? What quarters is that? What's your normal?
That revolver usually popped up in the second quarter ahead of our peak third quarter shipping, if I looked historically.
Okay.
And so it built up. We usually have a couple peaks, right? Our big shipping months our biggest are like August, September, so we got inventory coming in and ahead of those sales in June and July, so you'd see some revolver build there. I think maybe if you looked historically, maybe you saw some in maybe February, March ahead of that spring peak as well, but more so on the fall peak.
Okay. And can you give us a feel, what is it, like a $10 million kind of draw, you think?
I think it'd be less than 10.
Less than 10, okay.
Yeah.
Okay, thank you. That's all I had.
Thank you. Once again, that's star one to ask a question at this time. And I'm currently showing no other questions at this time.
Okay, great. If the public lenders could disconnect at this time, we'll do a quick private lender Q&A. We'll give them a few seconds to disconnect. And Shannon, could you ask for a Q&A on the private side?
Once again, ladies and gentlemen, if you wish to ask a question at this time, please press star then one on your touch-tone telephone. If your question has been answered or you wish to move yourself from the queue, please press the pound key. Once again, that's star one to ask a question at this time. And we have a question from Robin Snyder with PGIM. Your line is open.
Hi, thanks for taking the question. Just wondered if you could comment on July and maybe August performance so far. Thanks.
Yeah. So July we had continued EBITDA growth versus last year. Again, short of plan, and July was a little bit of a challenge from a margin. We had some unique margin rate in the month. That one-time type of things. We did some promotion both on the dance side and on the core uniform side, where we did some promotional things to move some excess inventory, and then we saw just a unique mix shift for the month that we had been anticipating year to date. So as I said, we've seen gross margin expansion from a rate basis all year long, and July went the other direction by about 100 basis points. And some of it surprised us just because it's just product mix of what the customers ordered, a little bit of customer mix, or some lower margin key accounts went heavier in that month, and then we did a couple promotional sales to move some chunks of inventory, excess obsolete inventory through. So all that to be said, most of it's one-time thing, and we don't think it's really going to plague us for the rest of the year, but had a challenging July and missed our plan for July. Still were able to post low single-digit EBITDA growth on an adjusted basis. As you flip to August, we're seeing a similar story. Actually, Gantz is having a really good August. They're up about 15%, so they're having a good month, partly because they're comping those challenges I just mentioned on the early part of this call of warehouse challenges from last year from a new implementation, so we're comping some of those months, but we're hitting our plan in Gantz for the month, which is good. We've maybe hit only one other month this year for Gantz from a sales standpoint, so we're hitting expectations from the top line. We're up about 15-16% year to date over last year, which is good. Core side is growing well, just below. We're hoping for low double-digit kind of increase, and they're in the high single-digit increase, so a little bit off the top line. So overall, I'd say it's a pretty good August so far. We'll close this week. It's a 5-week month, so this will be the last week of sales. So it's kind of within range of what we expected, but again, a little shy of our plan expectation. But we should show some good positive comp growth versus last year from a revenue and a profit standpoint.
Okay, thank you. Oh, and well, actually, free cash flow. So we wouldn't expect to see positive free cash flow in the third quarter, but we would in the fourth quarter, forgetting the seasonality there.
I think there'll be positive cash flows through the third quarter. I don't have the quarterly cash flow breakout in front of me, but I would expect us to pay down. Well, we paid down $5 million in the month of. We borrowed $1 million in July, I think, so we went up to $19 million. Then we paid $5 million down in August on that revolver. So we've got some nice positive cash flow so far, and we should see that continue through the third quarter. And then the expectation is to continue to pay that roll. We'll be through the revolver back to zero by middle to late fourth quarter, sometime in November. Is kind of what our current projections are, I think, from a revolver standpoint.
Okay, thank you.
Thank you. Our next question comes from Marianne Mazzolillo with Angelo Gordon. Your line is open.
Hello. You had mentioned that perhaps you'd provide more details regarding that inventory correction on the private side in your public commentary.
Yeah, so that the inventory correction, the raw materials, when we show that, hey, we're about $5 million off our plan for the quarter, and we pull that sheet back up. About $4 million of that is sitting in raw materials. I think that raw materials are all going to come back into level with the plan by the end of the year. Almost all, maybe about $1 million high. If we hit our revenue, within range of our revenues for the back half of the year, which I'm not saying we wouldn't be, but we're a little bit below in August. I would say we would hit our year-end inventory projections, maybe miss it by about $1 million. I'm trying to find my exact number that I have for inventory year-end. That increase, so we've got a bubble in raw material right now. What I was trying to allude to is that bubble would work itself out, and by the end of the year we would hit, inventory would probably, we projected $92 million. I think we'll probably be in the $94 million. So that's a pretty big jump downwards from the $110 million we ended in June. So not going to get all the way maybe to that $92 million, but feel like we can get into that low to mid 90s, which thus with the EBITDA, that's the strong cash flow generation that's going to allow us to pay down and get out of this revolver. So if we remember, like this inventory built at this time last year, where we got all our inventory problems started in the late third quarter and fourth quarter. It was fall inventory. Then we had a little bit more inventory coming into the spring, but the big bulk of this excess inventory happened last year. So it's really fall inventory. So we had to hold on to it for a year, and now that season is back again. We can sell through some of these outerwear, some of these fleece items, allow us to flush that inventory back down, and that's where we're going to see nice cash flow months as we work through this inventory and have that excess cash to pay down the debt.
Great. Thank you very much.
Sure.
Thank you. Our next question comes from Chris Wagner with All